Hello everyone, welcome to the Ichimoku.co daily markets review for the trading day ending Wednesday, February 25th. Now this is a free service that we provide, and for more information about a subscriber service, please go to www.ichimoku.co for further details. Now firstly, looking at the Nasdaq 100, and here we see the market continuing the trend to the upside in the first time frame. This candle making a higher high and a higher low than the previous candle, but we have a doji candle that's formed, and that's a candle of indecision. It's actually a candle that's closed down between the midpoint level of the range and the low, and that suggests that the buyers who had control for quite a few of these candles through this very strong uptrend have lost control, and for the majority of this trading through here from the breakout up above the Ichimoku cloud once again, and the breakout up above the high at 43.08 and further, we saw the buyers in control for the majority of those days. And today we've seen the sellers take control, albeit weak control. Now the important thing here, however, is the lack of colour in the body, and the colour in the body is the difference between the open and the close. So the close is finished above the open for these white candles, and it suggests that the buyers have made net progress between the open and the close for the day. If we have a black body form such as these, it means that the sellers have made net progress. So in other words, it's a test of net momentum. And here through this uptrend, we've seen the buyers maintain that net momentum to the upside as the market was trending up on its way. All of a sudden we have this doji candle form. It means that there's been no momentum in either direction for either the buyers or the sellers. And that has implications for the first time frame uptrend that the market's in. It's suggesting that there is a possibility of a change of trend to the downside. Now, if we are going to see that change of trend, we require confirmation, and that would be a candle with a lower high and a lower low. So it makes this current candle's low very important, and that's at 44.29, so we'll be watching that closely. If we do see that trend change to the downside, we're likely to see very strong support coming in at the 10% indicator, trading at 43.89, and it tends to be the first level when we have these very strong trends, and we can see how strong the momentum in the trend is in that short-term time frame by the angle of this 10% line, the green line here, and it's very, very strong. And it tends to be the first area where we see very strong support, and quite often the market will test to that level when we see some selling coming in and then bounce back off there. In terms of the trends in the higher time frames, we have a bullish market in the medium term time frame as well as the short term time frame, with the market trading above the Kijun Sen indicator, the pink line, and also bullish in the longer term time frame by trading up above the Ichimoku cloud, and that's supported by the Chica span here being above the corresponding price action. Now just looking at the Fibonacci extension here, and previously we saw the market trading through the 100% level in a bullish manner. There was potential for a change of trend when it tested around that level. But as always, we were confirmation, and we didn't see a lower high and a lower low, but we saw the buyers come into the market strongly. Now at the moment we are seeing this indecisiveness in the market, and if we don't see that change of trend, and we require confirmation, remember, and if we don't see that change of trend, there's a possibility that if the buyers do come back into this market, of them testing up to the 161.8% level at 44.96. Now just looking at the Nasdaq 100 here, with the top chart being an Ichimoku chart with a closing price chart overlaid on top, and on the bottom an RSI, a 14 period RSI. We have seen the market move into overbought territory and then just close down below there once again. With the market being in a very strong uptrend, really the RSI with regard to crossovers of overbought and oversold are of no use to us really. But where we can use this is either shifting up the oversold condition here, which is down around 30 up to a higher level, but we won't do that. But very often when we see the divergences, they can mean that we're going to have a retracement, and by divergence I mean we look at if the market's in an uptrend, we look at the market making higher peaks, and we want the RSI to mock that, which is a measure of momentum. We want the RSI to make higher peaks. If it's not making higher peaks and it makes a lower peak as the market makes a higher peak, then it suggests that the market is lacking in momentum at that time, and the momentum in the market at that point in time is not the same as it was previously. Now if we look at this run of trend here after the market tested up above the Ichimoku cloud and formed these series of higher peaks and higher troughs, we can see that at the moment in this section here that we're not seeing any divergence. But if we step back and look at this peak here to the peak here in the price action, higher peak, but if we look here from the RSI and the peak to a lower peak, it does suggest that there is a potential for a divergence. Now really what this is telling us is that in a different time frame there is potential for a divergence, so we probably should be looking at the weekly chart for that. Now looking at the weekly chart, and here we can see that we've had a series of divergences. There's actually 5 potentially with this last one, and we can see that each of these have led to something of a retracement. Not terribly significant, any of them, because none of them have been able to breach the Kijun-sen indicator. Most seem to have breached the Tenkan-sen indicator, but the important thing is that we tend to see stronger divergence when that second peak of the divergence is outside of the overbought zone, and with the first peak starting in the overbought and the second then in the outside of the overbought zone, it tends to be a stronger divergence. Now that suggests that this second divergence that we have potentially forming here may lead to a correction. Now we have to bear in mind that we actually don't have a peak formed here yet on this chart because the week hasn't finished trading, but if this week does finish down and a peak does form, then it suggests that there is potential for the market to come off, and that's only potential. So then what we've got to do is then go to our charts and look for confirmation of that on the candlestick or the bar charts with the market forming lower highs and lower lows. But it certainly does suggest that there is potential for the market to come off if we do see some selling coming into the end of the week. Next, taking a look at NYMEX oil. And here we've seen the buyers coming into the market for today's trading, a white body candle, and it's the first white body that we've seen for the past week or so. We had one roughly about a week or so ago on a downtrend, candle forming a lower high and a lower low, but only a fairly small white body and not a sufficient answer to the selling from the day prior to that. Then we saw the trend continue to the downside, finding support at the important Kijun-sen indicator for the past 3 consecutive trading days, and the Kijun-sen trades at 48.91, and that may continue to be very strong support. And with the buyers coming into this market strongly, it suggests that there's been some very strong upside momentum from the buyers. They've closed with control and they've shown some strong commitment, and a lot more commitment than we saw from the sellers for the previous day on that indecisive spinning top type candle. Now the problem for the buyers is that there's very, very solid resistance overhead. Firstly, we have the Ichimoku cloud, the bottom of the cloud just there, and that's providing very strong resistance as we saw in the recent past. We also have the Tenkan-sen indicator there, and that's providing resistance. So the potential for the market to appreciate is reduced very much so because of the strong resistance around this area. Now, having said that, however, with this current candle, it has opened within the cloud. So there is a possibility, if the market does come off, we could see some support coming in just below where the market's trading at the moment at the bottom of the cloud. And that's roughly about the $50.33 level. But we are seeing resistance coming in once again at the Tenkan-sen indicator. So a market that's not really a good trading market at the moment, combined with support just around the bottom of the cloud here, we have the 49.90 area acting as a strong potential support as well, previous strong resistance and then support in this market. And then if the sellers are strong enough to breach that area, the Kijun-sen may hold a strong support once again, and that's about the 48.91 region. Now the market is consolidating below the Ichimoku cloud here, and really it's not a pattern that we can probably trade successfully. And the reason is that when we have these congestion areas and we try to trade them as patterns, we always have to have a trend leading into the pattern, and the extent of the trend leading into this pattern is not significant enough for it to give us a reliable target on any breakout. The depth of this pattern here and the length of the pattern is much greater than what we saw in this uptrend leading into it. But the important thing is that it is a congestion area, and we are likely to see trending action develop from this eventually. So it could be to the upside, it could be to the downside. Now, in line with the market being negative in the short-term time frame, and trading just around the bottom of that Ichimoku cloud, there is a possibility that the next move could be to the downside. Based on this bullish candle, however, there is some doubt about whether the sellers are going to be strong enough to breach these areas, but we still should be watching the bottom barrier of this congestion area around 48.33 for a close down below there, and it would be completed with a close below. Now, even if we did see that, there is strong support down to around this swing low about 43.50. So if we see the breakout, not a lot of faith in the market continuing down through there. That would be an area that we should be watching closely if we did see the breakout. To the upside, a close up above the upper barrier could see the market appreciate, but we do have potential resistance anywhere within the cloud extending up to the top of the cloud around the $62 level. So not a lot of faith in a breakout either above or below this congestion area.